Hey, this is Jerry with TradeTheFifth.com. I want to take you through a little NQ trade that we did and called out in our trial futures day trading service that Paul and I are working on in the background as potential for service in the future. But I want to take you through a little NQ trade using the black box breakout indicator. First, I want to give you a little idea of how I was looking at the day going into November 8th, 2018. Currently trading in the Eastern time zone. So my regular time hours open is going to be at 9:30 a.m. But I want to give you a little bit of background as I do usually in the morning before 9:30 of how I look at setting up the day. The first thing I want to do is I'm going to go over to a little volume profile setting I have on the flexible grid. And you'll notice a couple of red lines here that I've got set up at 72.32 and 67.19. Now what I typically will do is at the end of a Friday I will look at setting up a guidepost for the expected move for the next week based on the close on Friday. So what I do is I look at the options market, and you can find that if you go to the Analyze tab and the Think Back subtab, and you set the date for, in this case, 11/2, with the following week, Friday being 11/9. On the close of 11/2, the market closed at 69.75.75, and if I look out a week, which is 7 days, I'll see the expected move is plus or minus 256.72. And really all I did was I did a quick calculation of adding and subtracting this number from the close on Friday, and I put up a couple of little guidepost lines here. So the expected move is set up by the options market and trading options on futures in this particular case using the NQ Z18, which is the December contract. I'm looking at 68% of the time from this Friday close with these particular volatility numbers in the expected movement range. 68% of the time the NQ by that Friday should close within this barrier. This Friday, sorry, let me go back to the chart. If you look at, we had the election on Tuesday, midterm elections in the US, and Wednesday was a big up day, had a big move, big gap, big run. But as you notice, it came right up to the high of the expected move. Going into the next day, and my setup for on Thursday, the 8th of November, where we did the trade, I'm looking for either a consolidation, which it turned out this day more or less was, or maybe a slight move down, but I'm not really expecting it to go well outside the expected move. And in this case it didn't, but of course, you don't know that until the days have painted forward what's going to happen. But my bias going into the day was consolidation after a big move up, a gap below us that eventually probably will get filled, which it ended up doing here on Friday, or some small move. So I'm not looking for, in my trading day, necessarily big trading moves. Okay, so that's my setup for the day. I'm going to go to my charts, and you'll see this is the November 8th period, and we're coming in at 9 o'clock in the morning up to the US market open. You can see this expected move line here. We actually came up and just about touched it, believe it or not, in the pre-market hours, 11 o'clock at night on Wednesday, 10 or 11 o'clock at night. We came up here and touched it. But in any event, you can see that the bias coming into the next morning is slightly down. That's kind of what I expected. Maybe a slight pullback, consolidation after a big up move. And you can see as I move forward time here, the US market opened at 9:30. We got a initial push down which broke the overnight range low. So that gives me a confirmation of my bias that I've broken the overnight range low, and I'm thinking this is headed in the direction that I think it's going to head. And as I start moving forward, you can see we start forming basically a chop range. This is our dynamic cloud based on an exponential moving average, but it's basically let's say a bias line. Above the cloud is long and below the cloud is short for trading decisions that we're making in this signal in the black box breakout indicator is using that information to set up these signals. We did get a long signal in this chop zone. It actually did not trigger long and broke the short, broke the stop, so this was an invalid trade at this point. And as we go forward, you can see one of the things that's going on is you're getting what I'm looking at is a bit of a consolidation triangle, and breakout high or low is going to give me a potential setup for going long or short. You see it's starting to squeeze into this range, and as we go forward, you'll see we start breaking this to the downside, and we get a signal here, and this is the trade that I'm going to talk through a little bit. We ended up getting a signal on this candle right there at the edge of the screen. So in real time you'd see 71.83 as a stop and 71.67 as an entry to go short. This is a signal that's closed below the cloud, and it met all of our conditions for this black box breakout indicator. And I set this trade up, and I'll show you, I actually tweeted it out in real time. This is a hidden tweet room that Paul and I are using together to trial some of the signals and potential service in the future, but I did tweet this trade out in real time, 71.83 and 71.67. And as you can see, as time goes on, we ended up getting a trigger here at this point. And usually when I'm trading on a 5-minute chart, if I get a trade that triggers, I'm going to run to a 1-minute chart and start managing the trade, and I'll show you how I manage that going forward here. So I'm going to go to my 1-minute chart, and you can see I'm going to actually show you both side by side. So the trigger came over here, and you can see my cursor. These are the lines for the stop loss and entry, and it triggered right here, which is right same point as my cursor is on the left hand chart right there. So here's my trigger, and I'm going to go back to just this one chart, maximize the sell. So we're triggered and in the trade here, and this is my initial stop loss. And as I go through managing the trade, I'm starting to see, you know, we've got a nice downtrending move coming up here, and I'll just throw a little trend line in to show that. And we're right about here in the trade, triggered, it's coming up, and it's touching this trend line, hasn't broken it. And we can see we're starting to now push lower and push lower. And as time goes on, a little bit into the trade, at this point I tweeted out movement of the stop loss to 71.80. I just brought it down a little bit here to meet up with this little pivot that came up, brought it down. Once we had the big push down, I'm going to start getting a lot more aggressive in moving my stop, because in my mind, really what I'm trying to do is scalp, you know, 5-10 points, that kind of thing, out of the trade. So I'm going to manage it pretty aggressively with what's going on here. And as time went on, you can see that we had a big push down. We start to get a little bit of consolidation in this area here. We got another push down. The volume is starting to drop off on my down move, and I'm going to start managing this trade on a 1-minute time frame quite a bit more tightly. You see what I call the equal and opposite move here in a 1-minute candle. We got a big move down and an immediate move up in the next 1-minute candle. And when that happened, at the open of this candle, I moved this stop down to 71.64. I'm going to start trailing a few candles behind this big push down. When I saw this move back up, I started managing a lot more aggressively my stop. So I moved it to the top of this candle here, and when this bar closed, I saw a little bit another move down. I'm starting to see the volume drop off a little bit, and then we start getting some up volume, and I see this candle coming up, and what I ended up doing was tweeting out, changing the stop to just a little bit above this particular candle here. So this was an accumulation candle, a drop, an accumulation, a drop, an accumulation, and I'm feeling like the tanker that's moving in a direction is starting to get movement against it as we start getting more and more signals going back up. So you can see here that I tweeted out moving this stop to 71.51.75. which is this particular red line here, and I tweeted that out just as this candle here started coming up and closed. And then we got, when this candle closed, this beginning of this red line is where I moved the stop to just above this candle here, and then as this candle opened, it came down a little bit and then shot back up and took my stop out. So we ended up taking that trade for 61 ticks, which on the NQ is about $305, and a nice little trade, meeting a couple of extra conditions that I had in looking up the setup of the morning, watching a consolidation period, a break, a setup that came from our signals here, 71.67 to 83, and we got a nice down move. And you'll notice as this ended up an accumulation candle here, and we started moving back up as it looked like it was doing on the 1 minute, we actually made significant move up, a big down, a big up candle, and would have taken our stop out if we would have left it up here, and would have had really no gain on the trade. So tight management on a relatively small scalping type trade that worked out very nicely for a $305 win on the 8th of November 2018, and the use of our black box breakout indicator on futures. Happy trading, folks. Take care.